Hi, I'm Ben Breslow with Jones Lang LaSalle, Director of Research in the Americas. I'd like to talk a little bit about the economic outlook for 2011 and its impact on commercial real estate. We expect 2011 to finally be the year that the private sector takes over for the public sector in terms of driving growth. Growth has been lackluster and has actually decelerated a bit from the surge from stimulus, monetary policy, and other government incentives that boosted growth in late 2009 and early 2010. And growth so far in terms of economic output and particularly job creation has been much slower than we typically see in this part of the recovery as compared to previous cycles. Why do we expect that to be different in 2011? A couple reasons. First, large corporations are flush with cash. They're seeing earnings and profits up. CEO optimism is high, and with the recent continued round of quantitative easing, the stock market has shown to be buoyant. Interest rates are very low, and we expect large corporations to begin to hire as we go into 2011 and certainly into 2012, much more than they have in the past. Slow in the beginning of 2011 and accelerating as we go toward the end of 2011, following on their willingness recently to spend money and invest capital in things like technology, equipment, and software. The second reason is that we believe that bank credit finally has stabilized and will begin to expand in 2011. Bank credit is a critical factor driving the consumer and the small business sector. Both small business confidence and consumer confidence, unlike large companies, has been deeply depressed and remains so, and that has certainly impacted consumers' willingness to spend and also small businesses' willingness to invest and hire. We believe that we're seeing just the very initial examples of bank credit beginning to expand, and we think that will accelerate starting in early 2011 and especially in the second half of 2011 and begin to fuel more optimism on the part of consumers and small businesses to help drive the recovery forward as the public sector stimulus and support begins to pull back. What does this mean for the economic outlook overall? We expect to see somewhere in the 2 to 2.5% range for GDP growth overall in 2011. That will be right about the same as 2010, but will feel better as the year goes on. And we expect to see job growth slow in the beginning of the year and accelerating in the second part of the year, really only beginning to bring the unemployment rate down in the second half of the year. And unemployment, which has been stubbornly high at 9.5%, could end 2011 right in that same range, 8.5% to 9%, after, especially with the labor force beginning to expand again when job creation resumes. What are the implications for commercial real estate demand? Well, we've seen demand begin to increase for core Class A prime locations across property types, and we expect that to continue into 2011, even fueling some decreases in vacancy and some initial bursts of rent growth in core locations and prime properties. The market overall will continue to be sluggish, certainly in the first half of the year, and B and C properties and suburban and tertiary locations will lag. We expect to see high vacancy, some potential continued downward pressure on rents in those marketplaces, and also some creative reuse, conversion, and even creative destruction of space that's not currently in demand in sort of secondary and suburban locations. We think that apartment markets will lead the way from a demand perspective. We've already seen that, driven by demographics as well as the struggling housing market. Hotels, building on a bit of a business resurgence and cyclical swing, is next in line in terms of demand perspective. Office and industrial, where we've started to see pockets of growth but still see sluggish demand overall, will be somewhere in the middle. And retail, given the struggles still on the consumer balance sheet side and the expectations we have for growth but slow growth in consumer spending and retail sales into 2011, we expect the retail sector to lag. That's our outlook for the economy and commercial real estate. Thanks for watching.